Hello, Maverick traders. Welcome out to your Maverick Currency midweek for May 25th, 2022. Corey here with you. Quick reminder, let's make sure we follow our trading plans. Let's not act emotionally. Sticking to the plan helps us to do the things that we want to do, the things that we've plotted out and planned for ourselves, and not get caught up in the emotion of the moment. So, let's do some review, a little bit of kind of a mixed bag in terms of FX and equities. On the FX side, currencies and crypto, I would say we've really had the right idea. Now, I thought that equities would bounce a little more than they have. They've been sideways the past couple of weeks. You'd kind of look at it, that's pretty impressive given all the news. I mean, Walmart and Target down, those stock prices imploding. Um, all of these companies, Snapchat and coming out and saying ads are going to be bad and downward forecasts and so on. The fact that the market's sideways over the past couple of weeks with so many little, minefields going off, that's pretty impressive, but it hasn't gone higher. We're just gravitating sideways, and I would have expected a rally. I was on record as saying I expected a rally. It didn't materialize. We've not been able to go up. We've just churned sideways, and that's not, the right call. We're going through this transitional phase where we had the Fed at our back, wind at our back with QE and money printing and all of these things, which are in essence pushing asset prices higher. And now we have them removing all of that liquidity and raising rates, and it's the opposite. It's a wind in your face. So things have to go right for markets to move higher and for assets to move higher. There needs to be a little period of time where you don't get that bad news and there aren't additional shoes to drop and negative catalysts. And we haven't had that. So the markets, I think, were poised to rally. That's why they're going sideways. They basically got exhausted on the downside like we thought, but the news that's come in has just continued to act as a wind at your face, so we haven't made any progress on the equity side. On the FX side, it has been absolutely fantastic. We spotted a really nice reversal in the US dollar. We talked about here's what will typically happen in this circumstance. We've pulled up the US dollar index chart. I really have traded that one well over the past few weeks. So that has been an opportunity. We talked about the fake out move above, and then it should drop for the next couple of weeks. Now we've seen that. And so the next question becomes, okay, the dollar has weakened as expected. We're pulling back. How far do we go down? Well, I'm going to come back to the US dollar index chart and we're going to analyze that together, but there's still more room. I think we rally first, a little short-term pop, and then another drop, but the bigger picture still has more downside, and we'll make sense of that here as we look at the dollar index. Energy has been on an incredible run. I've liked energy. The last couple of weeks, we've talked about that energy just is the place to be. That should lend itself better to the Canadian dollar and some other things. I think that's tired at this point. Everything goes through cycles, right? When you look at price action on assets, things need a breather. They need to go through a resting period. And that's why when you look at a chart, it zigzags. If you're in an uptrend, we zig up and we zag down and we kind of climb that way. If you're in a downtrend, it'll still have these corrective phases. Sometimes you'll go sideways for a period and then you'll go up some more. Sometimes you'll go sideways and then go down some more. But these are corrections, pullbacks, whatever you want to call them. I think energy, is probably approaching that level. I don't know that today's the day, but I have on the equity side taken some profits off in energy, which has been a great run. I would imagine taking some more off here in the short term. Crypto markets are broken, but again, they're probably in that resting phase before the next move and ultimately going to follow with more downside. That would be my big picture expectation for crypto. The RBNZ, we traded that meeting and it finally, with some patience, would have given a trigger. We'll talk about that setup, which we traded last night. German flash manufacturing PMI and services, it was a mixed picture. Manufacturing slight beat, services a slight miss. Both of those, though, above 50, which signals growth and signals strength in terms of the markets. So as we look at the markets, I guess as you kind of glance at this price action, you'd say, well, crypto is still a mess, and it is. The weakest crypto are falling the hardest. And this kind of speaks to how things work in terms of leverage and in terms of risk and reward. Let me explain it in this way. So, as we look at the crypto market, you'd have to put Bitcoin as kind of the best of the best, right? And then you'd say these others are not as good, not as strong. And I would compare it to something along these lines. When we think about, let's take an investor in real estate. Let's say that two people, they both make the same amount of money. They make 100 grand a year, whatever. And one person goes out there and they buy a second home as a rental property, and they get a renter in there, and look, if the renter's not there, they can probably cover this for a handful of months and get another renter in there, and it's just not a risky proposition. They make enough money, they feel confident they can fill it with renters. Okay, it's an investment opportunity. Somebody that makes the same amount of money, say they also make 100 grand, but they go out and buy 5 rental properties. Okay, and they try to fill those up with renters, and sometimes they can and sometimes they can't, and they don't have enough money to cover all of these, but they kind of assume, well, hopefully things won't get too bad, right? We got 5 homes here that we need to put renters in, and if all 5 go vacant, well, it's not going to be long before I'm losing houses, and I might lose everything. It's a high leverage situation. Now, which one's good and which one's bad? Well, it all depends, right? If you rewind back 10 years ago, you might like to be this guy that bought 5 different homes and highly leveraged himself and really took some risk because, well, the market's been fine. Housing prices have gone up a lot. You might have been stressed during that period of time at various times. You might not have had a renter or two, and it might have been stressful, but assuming you made it through, this guy is in a better spot. He took a bigger risk. He could have lost it all, but he had the bigger payoff. This guy took the less aggressive risk. That type of dynamic is happening every day in the financial markets. There are companies that are highly leveraged and companies that are far less leveraged. Companies that can cover their bills for a long time and companies that if something goes wrong, they have a big problem. In the crypto world, the same concept applies. If we look at something like Bitcoin, it is the biggest and considered to be the most safe. If people are nervous that the crypto markets are crumbling, Bitcoin is probably going to be one of the ones left standing, right? Ethereum probably going to be left standing, but some of these others may not make it through. Look, there are tens of thousands of cryptocurrencies out there, and the reality is most of them are going to zero. Okay, that's not opinion, I think that's fact. Most of them are going to zero. It's a question of, well, which ones survive and which ones flourish, and how does this whole market shake out and so forth. So there's times to own these types of currencies, the higher risk ones, and there's other times to own these. It's basically like, do you want to be this guy or do you want to be this guy in terms of your asset purchase? How leveraged and how aggressive do you want to be? When crypto is in the sweet spot and these prices are booming, look, you can make more money owning these types of cryptocurrencies. But when things go bust, you better hide out. If you're going to stay in crypto, you want to be hiding out in the safer, because on a percentage basis, Bitcoin is likely to get hit less severely than these ones. So what's the point? Well, if we're going to have a rebound and you're an ardent bull and you think, hey, we're going to the moon, this is crypto's about to explode higher, you'd probably get more bang for your buck in some of the junkier stuff, so to speak. But if we're in a downturn, you might want to be in these. If it's going to be a short squeeze, hey, these can bounce back more. They're just more leveraged. So it's just a more aggressive way to play in the crypto markets. I hope that makes sense. So it's been a bad week, quite clearly, for crypto. Other markets, look, the S&P is up 1% on the week. But as you can see, I thought we would rally out of this. We're not rallying, but we're not going down either. We're just flat. We're just sideways. So what do we make of it? Well, pretty impressive price action given the bad news, but we're still not really making any progress. And I think the analogy is just, look, every time we try to rebound, we just get hit with more bad news. And that's the problem with the bear market. That's the problem with trying to buy in a downtrend is, well, the rallies are just short-lived a lot of times. And so you can make a little bit of money if you're quick and precise, but it's just harder. You're running uphill. Here, you get to run downhill, and these can make some bigger size moves. So that's kind of the market environment we're in. We're in that corrective phase that I expected, but I thought we would correct in kind of this fashion, A, B, C type of manner. Instead, we're correcting sideways. That's not a good sign for markets because think of it from this standpoint. If you're down here at these lower prices, theoretically, it should attract buyers. Buyers that say, hey, discounted prices, I want to buy. We're probably going to go up. I'll make some money on that. The fact that there's just as many sellers down here as there are buyers, that does not signal positivity. That says that, yeah, there are some discount buyers and they're met with an equal quantity of sellers. Sellers still willing to sell even though prices are down this much. It speaks to how much supply is out there and just how bad this market is. So this is why sideways moves after an extended move are, not I mean, they're healthy for bearish traders here because you're resting and then you'll probably get another leg to the downside. But it doesn't speak well of the bulls because all you're able to muster is just sideways movement after such a deep drop. Not very good, not good at all. So as we look at the US dollar, I mentioned that we were going to dissect this chart a little bit more, and this is perhaps the most important chart that we're kind of looking at in terms of markets, right? And just saying, as the US dollar goes, so goes so many other things, and especially if we're going to trade directly in the US dollar, well, we want to be very aware of what's happening and where we're at in this process. All right, so we talked about that prior high, that important resistance zone. And my thesis was, look, it's going to probably fake people out initially, pop up above, and then drop back below. And that move back below is key. It's a fake, it's a false breakout, and you'll get a violent, swift move on the other side. And that's been working. That's been the great trade the last couple of weeks. US dollar has been the weakest currency. So how far down do we go? Well, here's how I would look at this, and it's kind of a cup and handle type of dynamic in place. You can kind of look at this whole thing as a big cup, and then the idea would be that some sort of handle would be formed. So what I'm going to say, just doing back of the envelope math, it's not a perfect science, but just kind of get us in the ballpark, is say, okay, top of the range is about 104, bottom of the range is around 88 or so. So the distance between those is roughly, not an exact number, 16 bucks, right? I didn't take to the pennies or anything like that because I don't need to. The general peak to trough is about 16 points. So that's how big this entire area is about 16 points on the dollar index. The handle here, or how far back we should fall, would normally be about 30% of the size of the cup. So if the cup is 16 points, well, what's 30% of that? It's about 480. You could round it to $5-ish if you want, but it puts us in the neighborhood of about 99. So as we back off this to about 99 should be the bottom of that handle, right in that general area. Well, we're at 101.87 right now on the dollar index, so we could probably, and in fact, I think this is cash settled end of day, so we're actually bouncing a little today. We're probably at 102, but that's still another 3 points lower in the index, which on a percentage basis, just to put it into perspective, is about 3% lower. So as you look at your US dollar charts, another 3%-ish decline in the US dollar is kind of what I would be looking at. Now, I kind of think it'll be more than that if you wait for the bounce. I kind of think we're currently bouncing, and we could bounce up to 103 or something and then head back there, which would make it more like a 4% drop from 103 or thereabouts. But that's the neighborhood of kind of where I'm thinking the dollar index goes. I don't think it's done. I think we have more downside, and before it's all said and done, I think we'll see the dollar index back down to around 99-ish, right around that level, at which point, the easy money, the downside trade, the bearish opportunity in US dollar has run its course. So there's not a lot happening here in FX world. Swiss franc has been stronger. Euro's been stronger. I highlighted this one as a potential long against the Kiwi if we were playing the Kiwi to the downside last night. The Kiwi popped and we were playing it against the CAD, which actually is the worst performer this week, why we were taking that trade idea. In fact, now would be a good time to probably show that chart. So here's what we were looking at in Kiwi CAD. Now it moved pretty swiftly. There was a pretty good sized run. Let me clear off some of this. But here was where it started to take off and where we were kind of looking to buy. And I put a little X there, and you can see how it wicked into that zone. So if you've been waiting, this is probably the area to do it. Now, you might look at this and say, well, are we breaking back below support? No, I don't think so. I always say, look, this is a support zone. It's like a couch cushion or a mattress. It's like you kind of squish into support. I mean, if you wanted to be really scientific about it, it's not rigid. It's not a cement line or something. You could have drawn your line right across this peak, and we're right on top of it. I think we're in support right now, and I would expect this to work its way higher. So it's up a little bit, a few pips from kind of where we were trying to buy it. If you bought it on that when it finally came down in there, took a lot longer. It took a few hours. We're talking about buying the next day. So it did kind of, we missed the boat on the first run. The first trade, you'd have already taken some profits off. If you got in here on the ramp, you can take some money off, and it moves 75 pips or so. And that was a good initial trade. This is round two. I still think it makes some sense. I don't have any problem with a potential buy in this general zone, and I would expect it to work its way higher. The general trend and momentum and things are working in that way. So as we look at this, let me jump over. Where did we leave off? Let's go. So where did we leave off? Right here. Let's go back to crypto, and whoops, that's on the FX side. Here's crypto. Again, we talked about Bitcoin holding up relatively well. All of these of late are just in a little sideways pattern. It's hard to say sideways when you're down 8%, but it still is. It's just kind of bouncing sideways volatilely over the big picture. Ultimately, probably still some more downside to follow. So as we look at the markets, our expectation has been more bearish in the market. I thought we would get a little bit of a relief bounce, and instead we're getting a relief sideways, and it's just not strong. There's just not much strength behind it. If we were grading this market, it's pretty bad. You're below that, which both get a negative, and then the slope is down, which is also a negative score. Technically speaking, you're just in a downward trend. It's just not a bullish market environment. Wanted to come back here. So this is the total world index, and same thing. I mean, essentially similar to the S&P chart. You're down, negative on the 20 period, negative on the 50 period, downward slope is negative. Does not score out well. Here's crypto, and you can see we're just in this consolidation pattern that I talked about. We're just in this kind of wedging formation. But ultimately, after such a big drop, all the same things I just talked about apply. If all you can find, I mean, think about the buyers that should be here. Prices are discounted dramatically, and you have an equal quantity of sellers for all of the buyers down here at a massively discounted price. It kind of speaks to there's a lot of sellers and not a lot of buyers. You're likely to move down and out from that pattern. So here in a few minutes, we get the FOMC meeting minutes. That's not usually a major market mover. You'll probably see some currencies, move around a little bit, specifically the US dollar. I'm rooting for the dollar to rally very short term because I want to re-up on the shorts, and I think there's still meat on the bone there. Preliminary GDP out of the US tomorrow, expected to come in negative at 1.3%. Obviously, you don't like to see a lot of negative numbers in GDP. That means gross domestic product is negative. I mean, we're losing ground, right? You start to lose economic momentum and start to print negative numbers. That's what a recession is. So, not great from that standpoint. We're not in a recession by any means, but we're kind of trending that way. So let's look at a few different things here. In terms of currency analysis, here was kind of the breakdown that I had. What looks better? Things like the Kiwi and the Swiss franc. Obviously, all your crypto looks bad, and there's just not a clear picture. There's not like I can't go out and say, hey, this one's moving and it looks great and the trend, and we're in that one of those little lull periods. So what I'd like to see is some counter trend moves that I can then start to take profit or to take advantage of, such as the US dollar. So let's analyze, what if the dollar bounces and what if it rallies here, and what would we be looking at? Well, it's interesting. I've taught the Bollinger Band technique, and if you're using the Bollinger Band strategy, the dollar looks like a buy on some of these. Like, let's go Euro USD. Look at this. So this is a bear. This is hitting the upper band below a 50 period moving average. This says the euro should fall and dollar should rally in the coming days and weeks ahead. And by the way, the last time it gave this signal, that's exactly what happened. It's almost identical type of pattern. And look at how the euro fell and the US dollar rallied. So this is why I'm not currently short the US dollar. Is, well, it's on a buy setup, right? This trade would get you long US dollars, and it's not a bad setup, to be quite frank. I'm not sure that it's going to have the same outcome. I don't think that we dive in Euro USD the same way that we did last time, but I do think it goes down initially, and then maybe we get the recovery thereafter. So I would play this cautiously. Either A, you're a buyer of the US dollar short term, or B, you're probably waiting for the next opportunity. But we had the right trade. I mean, if you were buying euro against the US dollar the past couple of weeks, look, it's moved 400 pips. I mean, if you can't make money on the 400 pip rally here over the past 8 days, you're not trading the right direction. So if you've been shorting US dollar, great. I don't think now is the time to do it. We got to be patient and wait for a better pitch to swing at. And that's kind of the case of US dollar charts. If we look at Aussie versus USD, again, I think we could see this kind of come down and then get the next leg. If you were looking at the CAD versus US dollar play, again, US dollar looks like it's going to rally short term, and then maybe we get a little bit of a reversal of sorts. So a little bit of patience there. We talked about the Kiwi being a little bit stronger. So if you were looking at the Kiwi, and same type of concept here, we didn't quite hit the upper band and give that Bollinger Band technique, but it's pretty darn close. And the same principle applies where Kiwi acts better than a lot of the other currencies in the recent trading, but I would still, I wouldn't be surprised if over the next couple of days, US dollar is the best currency out there, and then we bet against it. That would be my thought and concept. Mark says dollar Swiss franc is in the same boat. Probably the case there. So there you go. If you want to be a buyer of USD and you like trading the Bollinger Band technique that I've taught, it's in the educational classes. You got a couple of setups there to do it. See how the dollar's at a buy point. My thought, now I've talked about this before. These Bollinger Bands expand and contract, right? And sometimes they're really wide, and sometimes they're far apart, and then sometimes they're just more normal. And I'm going to call this area the normal distance between the bands. So this is really wide, right? This is a period of abnormal volatility. Well, if I look at dollar Swiss franc, I'm going to call this a wide period for the bands. See how far apart and stretched they are? This band down there and this band up there is abnormal compared to the distance of them on a more normalized basis. And if we back it out a little further, you'll probably see it even more. So let's go this way and see how this is kind of normal, maybe a little bit too tight right in here, but see how stretched out they are? What does that mean for us? Well, a couple of things. One, that it's a signal of volatility. The bands get really stretched when volatility is really high. So we know that A, volatility has been steep. It's been wild out there, right? That's the first thing, is we're in a high volatility period. The second thing is in these wide band scenarios, normally if I were buying at the lower band, you might think it could go to the upper band. Here, I wouldn't even think that would not be my target. That's just way too big, way too aggressive, way too optimistic. In a normal band setup, if you buy here and it goes to the easy, okay? You buy here and it goes there, easy. You buy here and it goes there, easy. To buy here and for it to go there is not easy. That is a huge, huge move. When the bands are stretched really wide like this, if I'm trading the Bollinger Band strategy and technique, at best, I would kind of target the middle, the 20 period MA. That's still a good run, by the way, but that's about how far I would think this will rally. And then it'll probably fade off. So I hope that's helpful information. But when those bands are really stretched and you've got a Bollinger Band setup, do not set your target all the way on the other side. It's just too much to ask. It's not probably realistic. Here to the middle, that's the 20 period MA is always right in the middle of those bands, right? Lower band to the middle, probably about as much as we're going to muster. Let's look at a few other charts. Maybe we'll pull up TradingView here and just, glancing at a few different things. Here's a couple of things that kind of stood out to me. I was looking at the pound chart, and there's not momentum or anything that's actionable right now. But what stood out to me is the calm before the storm is possible. Do you see we could draw a trend line down this way? And do you see that we can kind of draw the trend line this way? And we call this general pattern a volatility compression. It's basically the opposite of what we just talked about there with the bands. When the bands are really stretched, The stock's been crazy and volatile. When things are really tight together, it's compressing volatility. It's kind of a period where you're not going anywhere. You're just getting compressed tighter and tighter into the apex of that triangle. At which point, what happens? Well, you're probably going to break. Now, we don't really know which way. We could look at some other time frames and make a guesstimate and so on, but the truth is we probably don't know. But what I'd be watching for is some sort of break. And it could go this way, which would be bullish, and it could go this way, which would be bearish. But ultimately, pound looks like it's in that type of circumstance. Remember, this is pound versus the other major currencies, and it's just in this consolidation. It's just not doing anything right now. Can't really trade it, but that might change sooner rather than later. Kiwi, we've kind of rebounded up like we talked about. Can we make that next wave of buying, or do we kind of fail underneath this? You can see it's stronger than the pound. It's the last couple of weeks it's been stronger than most other currencies. I am a little bit nervous. Like, I would just trade this for short-term pops here in the very short term. Usually you don't get you go from here to some massive upside move because you have all this to work through. So if you're a buyer of Kiwi on these dips, you got to be pretty quick to take your profits. And then as it pulls back again, maybe you can re-up or reassess the situation. And that's kind of how I see Kiwi. A lot of these kind of have a similar viewpoint to some of the other currencies in that they might lack a little conviction. CAD kind of in a little bit of a downward phase the past couple of weeks. Do we reemerge to the upside? Do we go sideways? Hard to know and to feel super confident. Kiwi and Aussie, I would say out of the currencies, look a little bit more similar versus CAD. CAD's kind of been doing its own thing. And this makes sense. I mean, just location. Australia and New Zealand, a little bit more similar in terms of economy, in terms of economic circumstances, in terms of just, their general geography and whatnot. So if we're looking at Aussie, same type of approach to Kiwi. You might bounce, but there's still overhead supply. So in that situation and circumstance, you might have to just take a little bit more profits and whatnot. Euro and Swiss franc, if you're looking at buying something in FX, you can probably play the USD for a bounce for a few days like we talked about, but these would be the standouts to me. Euro and Swiss franc have been just better, cleaner, stronger charts. I think I would continue to look at them as the opportunity. We had a request for Aussie versus the Kiwi. So let me pull that up here. Where's my Aussie Kiwi? There we go. And if we just kind of look at this in terms of that pairing, let's go across a few different time periods. So there's Aussie Kiwi. You can see the Aussie pulling back. I don't know if there's anything that's really stands out. In the short term, Aussie just looks weaker versus the Kiwi. I mean, if I were trading it, I would say these are bearish setups. You got kind of a low base after a breakdown. Probably, again, drops to the downside out of that. If I look at the 1 hour chart, same thing. It just, I want to think that it can do something, but it's got to prove itself. Right now, it can't get off the floor, right? That's usually a bad sign. So in the very short term, these are just very short term charts, it might dip a little bit lower. On a longer term basis, it looks pretty good. This is where you get a deep pullback. A lot of times that's where you encounter those buyers for the next run higher. Like this one. See how it ran up out of that, or some of these pullbacks back to those moving averages can be good inflection points towards buying. This one kind of had a little false breakdown and then it recovered really quickly. The daily chart lends me to think that we're kind of at the tail end of the downside, but those 4-hour, 1-hour charts suggest we're not done yet. I mean, and you probably don't want to buy yet either because it's a big, ugly red candle. So you probably have to be patient here. Wait for some stabilization candle on the daily. Wait for those 4-hour and 1-hour to show you that they're starting to emerge and starting to turn upward. Then I can get behind buying. Then I think you'd be in a place where you can do that. I see the comment that it meets the Bollinger Band criteria, so we could look at that. And there you go, hitting the lower band, still above the 50. But again, as I taught it in class, I know that I teach this. You don't buy when it's the big ugly red candle. You got to wait for a stabilization candle. See, here you had a signal. You got to the lower band above the 50. Okay, we want to buy. Let's make sure buyers are returning. They are. Great trade. Okay, successful trade. Here again, hit the lower band. We don't buy on the green, on the red. It started to turn green. Okay, now we can be buyers. Nice successful trade. We don't buy yet. Wait for it to have a daily candle that shows some stabilization. What will happen, the reason that's important is the ones that are not ready, what will they do? Well, tomorrow, we had this is an ugly selling day today, right? It's a big red candle. A lot of times, if these aren't ready, you'll never get in anyway, and you'll save yourself. Why? Because tomorrow we might do this. And now the chart's broken, and now you have no interest in buying it because it's broken and closed below the 50, and it never gave you that stabilization signal and so on. You save yourself from a losing trade. So I would wait, make sure that we've got the stabilization signal happening, and then we can move forward with that from there. So, all right, proper position sizing, trade better velocity scores. That's something that's missing right here, right now, but these things go in cycles. We've had a good couple of weeks with some really good opportunities. Now, I don't know that there's anything that's a screaming buy or, pound the table, hey, you got to get into this right now, but there will be. There will be soon enough. Tomorrow, we've got a class Euro US dollar. That's tomorrow, 3 p.m. Mountain Time, 5 p.m. Eastern Time. And then, as always, we'll send out the currency trading room over the weekend. Hope you've enjoyed this midweek. Have a great rest of your week, and we will see you next time. Goodbye, everyone.